All right, we got to talk about SoFi stock. It's down over 16% this week, around 5.5% today alone, sitting around $7.50, currently hovering around levels not seen since June of this year. And the worst part is the falling doesn't really have a clear end in sight. So where is the stock going to end up? And what's been going on behind the scenes to drive SoFi to this level? Let's talk about it. So in this video, I'll cover some of the main points that I've been seeing with regards to SoFi this week, and I'll spoil the video right now. There was no major news that warranted this drop, but I'll cover it along with what I'm doing and where we go from here. First piece of news, both the ARM and the Instacart IPOs went live. SoFi was providing this to their invest members so that you could invest before the rest of the market could. Both of these names initially surged up and then fell afterwards. So, I mean, with this, you could argue both sides. On the bullish side to say that, well, this is a good trading opportunity that SoFi provided their invest members. On the bearish side, you could argue that, well, the stocks fell, so obviously it's a bad trading opportunity. But SoFi did offer this access to its members, which is great, and SoFi doesn't control the market. So if a macro reason drops the entire market along with these IPOs, that's not really SoFi's fault for offering it to you in the first place. Nobody's blaming, the banks that took these companies public when the stocks fall. Okay, so that's the first piece of news, and I think we've beaten that topic to death in previous SoFi weeklies. Piece of news number 2. SoFi car buying. This was posted on Reddit yesterday by Bender9000 around SoFi car buying in a partnership with TrueCar. Now, if you go to TrueCar's website, they have a wide selection of vehicles from economy all the way down to premium supercars. So there's a wide range of selection for its users. I would imagine the partnership with SoFi is similar to others, where SoFi would just be getting a referral fee and not undertaking the risk themselves. And as I was reading this piece of news, I was thinking there could be synergies here with regards to SoFi's insurance product offerings, which are also referral fee based. The pro around this piece of news is that it reinforces SoFi's end-to-end suite of products, essentially by covering another use case, in this case, car buying. However, the timing around this is really interesting, considering that some other news this week that dropped is around banks exiting the auto loan market in general. I know in Canada, a couple of banks reported that this week. So I'm not sure what the initial demand will be for this product. And even if this is going to be a contributor to the bottom line, quite frankly, I think that, this is not going to be material from a financial perspective. This is not going to be a needle mover from them winning money, but it's still good to have from an ecosystem perspective because, again, it's just another use case that they cover, even if it is something that's minor and only based on a referral fee. Now, this partnership with TrueCar is still in beta phase. It's going to be fully launched sometime, hopefully before the end of the year. Now, the ecosystem point, I think, is the main takeaway and something that I'm very bullish on, because essentially what it does is it reinforces that flywheel even further. Earlier this week on Wednesday, there was the QED CEO Summit, and one of the slides from that fireside was shared by Chris on Twitter, which showed the NPS scores for legacy financial institutions versus fintech companies, and the results were quite stark. SoFi and Nubank topped the scores with 90 NPS each. In his tweet, Chris explains that anything above 80 NPS is defined as a world-class brand in terms of that satisfaction scores. That's what NPS essentially measures. I also tweeted about this and basically highlighted this discrepancy. 90 NPS is absolutely fantastic, don't get me wrong, but the more staggering finding for me was the legacy scores. Chase at 23 NPS, Citibank at 21, Bank of America at 11, and Wells Fargo at 4 NPS. This was mind-blowing to me. 4 NPS. This is basically everybody who is currently a customer at Wells Fargo is telling all of their friends to not bank with Wells Fargo. And I think this further emphasizes the user experience that SoFi provides to its members. And the slide right here is a very compelling reason of why SoFi wins as a pure product offering versus legacy institutions. And further to that, why fintechs in general win versus legacy institutions from that user experience perspective. So obviously that's all very positive when you pair the new product offerings, the partnership with TrueCar, and the NPS scores. Overall, speaking to SoFi's ecosystem, both are very positive in isolation. But the stock has been falling in the short term, down over 16% on a weekly basis. A good portion of this is the fact that the entire market has been falling since the FOMC meeting presentation this week. The main takeaways from the Fed meeting this week was, number one, that they kept rates unchanged at 5.5%, which is basically a pause. The Fed statement from Powell repeated that growth is solid and inflation remains elevated. The Fed dot plot showed that 12 members of the FOMC still believe that there's going to be another raise in November, about 25 basis points. So that is still on the table. And at a high level, I don't think it takes a genius to realize that this had an instant market reaction. You could see the US dollar spiking, the bonds yields spiking, and stocks dropping as a result of this. I think the key takeaways, the Fed statement sounded hawkish, which of course they want to telegraph hawkishness. I've talked about this in the past. And a November rate hike is on the table as the Fed sees stronger growth and higher inflation ahead. Now, obviously, what this does is it introduces higher levels of uncertainty in the market, especially considering the possibility of a November rate hike. All of this is going to affect the environment for stocks in general, with the entire market seeing a pullback. You can take a look at the indices. It's not only SoFi that's falling. However, I think that the short-term price movements are nothing to really be concerned about. As with SoFi as an underlying company, they're still executing well. They're still introducing new products consistently. They're still expanding their ecosystem to new members. And this is also one of the reasons why I wanted to even make this video in the first place, to emphasize some of the wins with the underlying company, despite the short-term price action movement and the volatility that we're seeing right now. SoFi is still expected to be profitable by Q4 and have sustainable growth moving forward in all of their business segments, with a ramp in members and a ramp in revenue as a result of that. I added to my position at $8 per share and will continue to be a buyer anywhere under $8. Right now, as of this recording, SoFi is trading at $7.50. The last time I added to my SoFi position, I think, was end of June, beginning of July. So this is a perfect time for me to keep allocating new funds, and I'm allocating net new money that I'm putting into the market, but I'm also reducing my position in Unity Software given the recent price changes that they had. I made a video about this on Monday. So that money is going to be redirected into SoFi, and it's going to increase my concentration in SoFi overall, which is something that I'm totally content with. SoFi is about 20% of my portfolio. It's number 2 behind Tesla. And interestingly, what I've been seeing is that the retail sentiment follows the stock action very closely. Much of it is very emotional with regards to retail investors, which is why videos like these are important, to focus on the data and the facts and the metrics of the underlying company and not the emotions associated with the volatility of the stock. And just to prove this point, when I posted on X that I had bought more SoFi stock, a lot of people responded saying that the stock was going to go lower and I could get a cheaper price at $6, $5 per share. I found this a little bit funny because the prevailing sentiment when SoFi broke $11 per share was that the stock was going to go to 14 or 15 in a very short period of time. So the sentiment is very high correlation with the stock price, and it's directional based on where the stock is moving in the short term. And ultimately, I think that if SoFi does fall further down into the $6 range, I'm perfectly happy to keep buying, honestly, at a cheaper price, because I am reinforced by the fact that the underlying company is executing. So that's just, I guess, my overall message with everybody who's looking at the stock price falling. For right now, this is the Fundamentals Investing Podcast. Thank you so much for listening.